So it has been quite a while since I last talked about Tesla, and since then, the stock hasn't been doing so great, which I know is a huge understatement. The stock has plummeted almost 50% from all-time highs. It has its longest losing streak since 2010. The CEO managed to piss everyone off, and many people are actively boycotting the brand now. So is this the end for Tesla? Maybe it is, but as a Tesla investor, I wanted to see if this stock is still worth holding on or not. That's why I wanted to do this video and share what I found out. Because I also bought this stock before I knew Elon was crazy. And I think there's no shame in reviewing my holdings every now and then. So first, let's start with the obvious, the fundamentals. There's no denying that Tesla's fundamentals have deteriorated. First, their revenue growth has stagnated since 2023. Like back then, we were seeing 30%, 40% and even 90% kind of quarterly growth. But now, it is only barely growing by a single digit. Like, if you had shown me this chart and asked me to guess what stock it is, I would have probably guessed Sheng Siong. Heck, even Sheng Siong is currently growing faster than Tesla right now. Tesla is definitely no longer the kind of growth stock that we all knew 3 to 4 years ago. Not just that, their gross margin has plummeted by quite a bit from 3 years ago, with no signs of recovering. Their earnings per share has also dropped, free cash flow has plummeted, and their change in EV sales in 2024 have also dropped by quite a bit as compared to 2023. This is all happening at a time where almost every other automaker is seeing growth in their EV sales, and when there is more and more EV adoption globally. Now, you can see that it's because, Tesla sales have dropped because there's more and more competition. Interest rates are high, so people are spending less on EV, or Tesla is a premium brand and cheaper EVs are coming out, so Tesla is getting outpriced. Personally, I think all those are just excuses because I think it has more to do with the fact that the company is being run poorly than anything else. Not just that, Tesla is also increasingly losing one of its strongest moats, pricing power. Like, if you just look at any of the best companies in the world, whether it is Apple, Amazon, Google, Meta, all of them have pricing power. Pricing power is a company's ability to raise prices without losing customers to sales or competitors. Like Apple could just raise their phone prices and people would still rush to buy the latest iPhone. Same for Google and Meta. They can just charge more for their ads and people would continue to advertise on them because there's simply no other alternative. But you can no longer say the same for Tesla. The average price of a used Tesla has dropped by quite a bit, and yet it still isn't enough to drive up demand. So that's point number one. The fundamentals have deteriorated and it has less to do with the macroeconomics and more to do with the company itself. Point number two. The public sentiment for Tesla right now is just not great. And it has all to do with the CEO himself, Elon Musk, getting involved in politics while doing that stupid hand sign. Now, I guess he has his reasons for doing the things he does. Some say it's because he has a big ego and wants to win at everything. Others say he just wants to do good. But whatever the case, we can't deny that it has affected the Tesla brand image. For example, in the US, Tesla charging stations are being set on fire. Showroom vandalized, cars are being set on fire. There's nationwide protests against Elon and the company now. By siding himself with Trump, Elon has not only damaged Tesla's brand value, he's also alienating himself from his initial supporters. In the past, people who were buying Tesla cars were people who supported the vision of the Democrats, stuff like sustainability, green energy, and fighting climate change. But now, by attaching himself to Trump and firing people left and right in the federal government, well, that's going to piss a lot of people off. And even if you were party neutral in the US, if you saw all this hate and vandalism against the company, you would think twice about getting a Tesla now. And that's just in the US alone. In the EU, things are also not so great too. This is the latest report for February. Over in Germany, which was Tesla's third or fourth largest market, it saw a huge 70% drop in sales year over year. Elsewhere, car sales have also dropped by anywhere from 30% to almost 50%. The only silver lining here is car sales did go up in the UK. But meh. Then over in China, Tesla's second largest market, things aren't looking too good either. Basically, almost every other Chinese automaker has sold more cars than Tesla. Though, this has less to do with politics and more to do with the fact that the better selling cars are just more affordable. Quick pause. If you would like to research more about a company, one easy way to do that is by checking them out via the moomoo app. To do that, all you need to do is open up the stocks that you are interested in, head over to the company tab, and here you'll find a ton of useful data. For example, if you want to know whether Tesla's current stock price is high or not, you can use Moomoo's company valuation feature. For instance, you can see that Tesla is currently at the 62th percentile as compared to the past 5 years. You can also find Wall Street analyst target prices and ratings with Moomoo analyst ratings feature. You can see detailed reasons for analyst ratings and their track records. Besides that, Moomoo also offers Morningstar ratings, which is one of the sources that I often refer to. It's a paid feature, but it's available for free on Moomoo. You can also use Moomoo's smart analysis to find current market sentiments, money flows, results of technical indicators, potential buying and selling points, and more. All of which can help you make better decisions when deciding whether this is a good company to invest in or not. New users who sign up to Moomoo Singapore will get to earn up to $820 worth of welcome rewards when you fulfill the terms and conditions. Plus, enjoy zero commission for US, Hong Kong, and Singapore stock trading, as well as zero commission trades on US options every month for up to 100 contracts. For more details of the promotions, do refer to the link promotion page in the description below. Third, I think Tesla no longer had a sense of urgency. Like I'm sure we have all heard about the story where Elon Musk had to sleep on the factory floor during production hell, and they were rushing out cars and fixing problems just so that the company won't go bankrupt. But now, I think it has been years since we last saw a new Tesla car. Like, where's Tesla Semi? Isn't it supposed to be coming soon? Where's Tesla Roadster? Where's the affordable models? Why has the ramping up of Cybertruck been so slow? Like, I think if Elon Musk from 2020 saw how slow Tesla is moving today, even he himself would also get pissed off and call him an idiot sandwich. Like, why are you getting yourself involved in every other thing except for Tesla? Though, to give credit where credit is due, Tesla has been doing refreshes of their existing car models. So it's not as though the company is just sitting around and doing nothing, like a lazy bum bum. But I highly doubt that is going to help much. Fourth point, while Tesla is imploding everywhere, the most remarkable thing about it is that the stock hasn't imploded yet. Yes, sure, you can say that the stock has crashed by 50% from its all-time high. But if you compare it to October last year, before Tesla went up purely due to Trump winning and no other fundamental reason, the stock is actually still holding up quite well for now. And if you compare Tesla against Apple or Google, for example, you will start to see how absurd Tesla's price is currently. Tesla has a much lower earnings per share as the other two, lower return on equity, lower gross margin, lower net margin, lower revenue, lower net profit, and as you have seen earlier, lower growth. And yet, it can still have the highest PE ratio as compared to the other two here. Now, maybe you can say that this is because investors are expecting Tesla's growth to pick back up, but the consensus EPS over the next 2 years is expected to continue declining. So, given the deteriorating fundamentals with no signs of improving, I certainly think that it's very possible for the stock to plunge by another 50 or even 70 or 80% from current levels. Like, seriously, if the stock was to trade at its fair value today, according to FinChat, it should actually be trading close to $100. And according to Guru Focus, it should be trading at $51. But hear me out, while the sentiment is quite bad for Tesla right now, from my research, the Tesla bulls or fanboys or Delulus, whatever you want to call them, have actually pointed out several bull theses. First, according to Elon Musk, he believes that the future of Tesla will all be about autonomy, both in driving as well as the Optimus robot. And time again, Elon Musk has pointed out that if someone doesn't believe Tesla is going to solve autonomy, he should not be an investor in the company. In fact, according to the Super Tesla bull, Dan Ives, autonomy will represent 90% of the valuation of the Tesla story. Now, whether this will come true or not, I guess time will tell. But for now, Tesla is planning to launch their first unsupervised FSD in Austin, Texas this year, then California a few months later. And in 2024, Tesla is also planning to start producing Cybercabs, Also, we can't discount the fact that Elon's bet of siding with Trump might pay off bigly. That's because all this while, Tesla is facing regulation issues with the FSD. But with Elon being buddy-buddy with Trump, there's a very good chance that Trump will ease the rules of self-driving cars, and that will directly benefit Tesla. Second, Tesla is planning to come out with more affordable models this year. And the good news is that they are on track for start of production in the first half of 2025, and it will be produced on the same production lines as the current vehicle lineup. Third, while Tesla is losing market share in the US and EU, they are actually going to launch in India soon. And India is a big market, which will help in increasing revenue. And last but not least, Tesla Energy is also progressing quite well. And if you trust the bulls, Tesla Energy has a much bigger potential as compared to car sales or even FSD and robotaxis. So all in all, while Tesla's future look bleak, there are actually some bright spots here and there. So with all being said, I guess the question is, what am I going to do with my Tesla holdings now? For transparency purposes, I've just liquidated my entire Tesla holdings as of 17 March 2025. Not because I've lost faith in Tesla. I still believe in their mission and believe that they will eventually achieve their FSD, robotaxi, and Tesla board goals. Instead, the reason I sold my Tesla holdings is mainly because their current valuation just doesn't make sense to me right now. So if Tesla ever drops back down to the $100 range, I will be looking to add Tesla back to my portfolio again. Though, with that being said, I think there's also a very good chance that Tesla can easily go right back up. Because she sold permit, but that's perfectly fine for me. In the meantime, I'll be reallocating the funds over to SCSG, an ETF that holds many of the US growth stocks, as well as some other individual stocks, which I will talk about in future videos. But I'm interested to know what you think. Is Tesla still a good investment? Or do you expect the stock to jibaboom 18 levels underground? Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.